Hey everyone, welcome back for another deep dive. You ready to level up those trading skills?
Always ready. Let's do it.
All right, so today we're tackling trend continuation patterns. You know, those chart patterns that tell us, hey, this trend's just taking a breather, it's not done yet.
Right, exactly. These
Well,
patterns are all about identifying those temporary pauses in the market so we can ride the trend wave and hopefully make some profits along the way.
exactly. And to guide us through this fascinating world, we're diving deep into an article called The Best Trend Continuation Chart Patterns by Rolf. It was just published on November 8th, 2024.
Rolf's work is always insightful. He's got a knack for explaining complex concepts in a way that makes sense.
Absolutely. So before we get into the nitty-gritty of specific patterns, I'm curious, what's the biggest misconception traders have about trend continuation patterns?
You know what? I see a lot of traders getting spooked thinking these patterns signal the end of a trend.
Yeah, it's easy to see a pullback and think, oh no, it's all over, time to jump ship.
But that's where the opportunity lies. These patterns aren't about reversals. They're about pauses. The market's just catching its breath before it continues on its merry way.
So it's like the trend is hitting the snooze button, not the off switch.
I like that analogy. And that's where the skill comes in, being able to identify those snooze button moments and capitalize on them.
But Rolf really emphasizes that context is key, right? These
Yep.
patterns have to be analyzed within the overall trend.
Oh, absolutely. It's like reading a single word and trying to understand the whole story. You need the full context to get the true meaning.
All right, context is king. Got it. So tell me what makes Rolf's approach to these patterns so unique. What's his secret sauce?
Well, one thing that really stands out is his focus on what he calls momentum inside momentum.
Momentum inside momentum. Okay, I'm intrigued. Break that down for me.
Basically, it's not just about spotting a shape on the chart. It's about understanding the momentum building within that shape, especially on lower time frames.
So it's like there's this hidden energy coiled up, ready to be unleashed.
Precisely. And Rolf even has a unique entry strategy using the inside day pattern, but we'll get into that a little later.
Okay, you've definitely piqued my curiosity. Now let's start exploring some of these patterns. And since we're talking about visually recognizing them, let's start with those with cool names, like flags and pennants.
Yes, the classics. And they really do live up to their names.
So paint me a picture. What does a flag pattern actually look like on a chart?
Imagine this. You've got an uptrend, nice and strong. Then suddenly the price starts to pull back.
Yeah.
Beauty, it's contained within two parallel lines, forming what looks like a flag on a flagpole.
Okay, I can see it. The flagpole is the initial uptrend and the flag is the pullback.
Exactly. And those parallel lines show us support and resistance levels.
So it's like the price is taking a break, waving back and forth within that flag before continuing its upward journey.
You got it. Now, a pennant is similar, but instead of parallel lines, it forms a triangle with converging lines as the price consolidates.
So it's like the flag is flapping in the wind while the pennant is all taut and ready to take off.
That's a great way to visualize it. And just like with the flag, the breakout from a pennant signals the potential continuation of the trend.
So it's all about that breakout. But how do we actually use these patterns to trade?
Well, the key is to wait for the price to break out of the flag or pennant in the same direction as the original trend. That's your signal to potentially enter a trade.
Got it. Breakout in the direction of the trend. That makes sense. But Rolf had a really interesting point about volume and pennants, right? Something about lower volume.
Yeah, that's a great observation. He says pennants often have lower volume than flags, which actually shows a much tighter consolidation before that breakout.
Ooh, that's a nugget. I'm definitely noting down. Lower volume in pennants, tighter consolidation.
Okay, so we're looking for the breakout, preferably with an oomph behind it. Now, what about triangles? They seem to be everywhere in the trading world.
Triangles are another classic, and they come in two main flavors, ascending and descending.
Ascending, descending. Okay, I'm picturing triangles now. But how do these actually form on the chart? Let's start with the ascending triangle. Imagine an uptrend with a flat resistance line at the top and an upward sloping support line forming that triangle shape.
So the price is bouncing between those lines, getting squeezed tighter and tighter.
Exactly. And the descending triangle is just the opposite, flat support at the bottom, downward sloping resistance above.
Okay, I'm seeing it. Both show tightening range, hinting at an impending breakout.
And just like with flags and pennants, the breakout direction confirms whether the trend is likely to keep going.
All right, so breakouts are our green light. But how do we avoid those fake outs? You know, those times when the price breaks out only to reverse back in?
Yes, the dreaded fake out. That's where volume comes in again.
So we want to see strong volume on the breakout, right?
Exactly. But Rolf takes it a step further. He doesn't just say, look for strong volume. He gives us a specific formula.
Oh, I like when there's a formula. Makes it
Right.
more objective, less guesswork.
Right. So he says to look for volume spikes that exceed the average volume of the past 5 to 10 candles.
Okay, so it's not just eyeballing it. There's a concrete way to assess that volume. I like that. Okay, I'm ready for the next pattern. Hopefully one with a name as cool as flags and pennants.
Well, how about the cup and handle?
Cup and handle. Now that one definitely sparks my curiosity. What in the trading world does that look like on a chart?
Picture this. The price forms a U shaped like a rounded cup, then forms a little dip on the right side resembling a handle.
Okay, I'm visualizing it. The cup and the handle, I see it.
Right.
But what does this pattern tell us about the market?
It usually means the market is taking a break, consolidating before potentially continuing upwards.
So it's like the market is sipping some tea from its cup before grabbing the handle to lift it higher.
Haha. I love that analogy.
But
But here's the thing. Rolf is very clear about the handle's importance. That little dip shows buying pressure building. Ideally, the low of the handle should be higher than the low of the cup, which means sellers are losing their grip.
got it. The handle is like a mini power-up before the big move. So how would we actually trade this pattern?
A common strategy is to buy just above the handle's resistance, placing a stop loss below its low.
Okay, buy above the handle, stop loss below, makes sense. What about our profit target?
Aim for a level equal to the cup's depth.
So we're using the pattern itself as a ruler to gauge how far the price might move. I like that. But remember, we need to see this pattern within a larger uptrend and confirm it with that volume surge Rolf talked about.
Okay, there's a lot to unpack in that cup and handle, but it's making sense now. What other patterns are on the menu today?
Well, we've covered some of the key ones, but there's a lot more to explore. Let's dive into rectangles, the inverted head and shoulders, and that fascinating inside day pattern I mentioned earlier.
Ooh, I'm ready for more chart pattern wisdom. Lead the way. Okay, so we've got flags, pennants, triangles, even a cup and handle. But before we go full-on pattern hunter, how do we make sure we're not just seeing things?
You mean like seeing patterns where there aren't any?
Exactly. How do we avoid those head fakes? Yeah, thinking we've found a perfect flag, but it's just random noise on the chart. That's a crucial skill, and it's something Rolf really emphasizes in his article.
So what's the secret? What's the Rolf method for separating the real deal from the decoys?
Well, he gives us 3 key things to look for. First up, support and resistance levels.
Ah, the good old support and resistance. Can't escape those in trading, right?
They're like the foundation of technical analysis, and they play a huge role in identifying valid continuation patterns.
Okay, so how do support and resistance help us with these patterns?
Think of them like the boundaries of our patterns, the walls of a house. They give us a framework to work with.
So for a flag pattern, we should see clear support and resistance lines forming the top and bottom of that flag shape.
Exactly, and this applies to most continuation patterns. Those support and resistance levels help us define the structure of the pattern. Make sure it's not just a random squiggle on the chart.
Right. Support and resistance check. What's next on our detective checklist?
Trend lines.
Trend lines. Okay, I see where you're going with this.
Trend lines are super helpful, especially with patterns that don't have those neat horizontal boundaries. Think about pennants or cup and handles.
Right, they're kind of curvy, flowy.
Exactly. And trend lines can help us confirm those boundaries, give us a clearer picture of where the price might break out.
It's like connecting the dots to reveal the bigger picture, right? We're not just looking at isolated squiggles. We're seeing how they fit within the overall trend.
You got it. Now for our final clue. Pay close attention to higher lows in an uptrend.
Higher lows. Okay,
Hey.
rewind a sec. Why are higher lows so important?
Higher lows are a strong signal that buyers are in control. The trend is likely to continue.
So it's like a staircase. Each step back is higher than the last.
Perfect analogy. You're climbing higher and higher, even though there are some dips along the way.
Got it. Higher lows, bullish signal. Okay, we've got our support and resistance lines, our trend lines, and we're watching for those higher lows.
Oh.
What's next? How do we take all this and create an actual trading strategy?
Now we're talking. This is where it gets really exciting.
Lay it on me. I'm ready to turn these patterns into profits.
First, let's talk about time frames.
Time frames. Right, because these patterns show up on all kinds of charts, don't they?
They do. You might see a flag on a 1-hour chart, a pennant on a daily chart, even a cup and handle on a weekly chart.
So how do we know which time frame to focus on? It feels like there are endless possibilities.
That's where the magic of multiple time frames comes in.
Multiple time frames. Okay, I'm listening.
Rolf recommends using a higher time frame, like a daily or weekly chart, to determine the overall trend. Is the market moving up, down, or sideways?
So we start big picture, zoom out to see the whole landscape.
Exactly. Once you've got that big picture view, then you switch to a lower time frame, maybe a 15-minute or 1-hour chart, to pinpoint those entry points using the continuation patterns.
Huh, so it's like using Google Maps. First you zoom out to see the whole route, then you zoom in to find the exact street address.
Perfect analogy.
Hmm.
Now, once we found our trade setup using these patterns in multiple time frames, let's talk about entry and exit strategies.
This is where the rubber meets the road. How do we actually time our entries and exits to make sure we're not just throwing darts at a board?
Right, timing is everything. And one of Rolf's key tips is to wait for a full candle close above the pattern's boundary before entering a trade.
Full candle close above the boundary. Okay,
Yeah.
why is that so important?
It helps us avoid those nasty false breakouts, those times when the price seems like it's breaking out but then reverses back in.
Ah, yes, the dreaded fake out. It's like getting tricked into thinking the starting pistol has fired.
Exactly. So by waiting for that full candle close, we're adding an extra layer of confirmation.
Patience is a virtue, even in trading. Got it. But what about exits? How do we know when to take profits or cut our losses?
Well, we can't talk about exits without talking about risk management. And the most important tool in your risk management arsenal is the stop-loss order.
Stop-loss orders, essential for any trader, right?
Absolutely. It's like your safety net. It automatically sells your position if the price drops to a certain level, which helps limit your losses.
So we don't blow up our account chasing a losing trade.
Exactly. But where do we actually place that stop-loss order? That's the key question.
Give me the Rolf wisdom. Where does he recommend placing those stops?
Rolf suggests placing stop-loss orders below recent swing lows in an uptrend or above recent swing highs in a downtrend.
So we're giving the trade some room to breathe, but not too much.
Exactly. It's all about finding that balance between giving your trade space to move and protecting yourself from unnecessary risk.
Finding that sweet spot is key. Now let's talk about the fun part, taking profits. What are some smart strategies for locking in those gains?
Rolf highlights two main approaches. The first is the measured move.
Measured move. Okay, break that down for me.
Basically, you measure the height of the pattern, say from the bottom of a flagpole to the top, and then project that same distance upward from the breakout point. That becomes your profit target.
So we're using the pattern itself as a ruler to gauge how far the price might move.
I like that. What's the other approach?
The second approach uses a fixed reward to risk ratio. This means you determine how much you're willing to risk on a trade compared to your potential reward. So if I'm risking 1%, I might aim for a profit of 2% or 3%.
Exactly. You're making sure the potential reward justifies the risk you're taking.
Makes sense. So we've got our patterns, our time frames, our entry and exit strategies, our risk management tools. Anything else we need to know before we move on?
There's one crucial thing Rolf emphasizes: practice and backtesting.
Ah, yes. Practice makes perfect. Or at least it gets us closer.
Exactly. You see, understanding these patterns on paper is one thing, but actually using them in real-time trading is a whole other ballgame. And that's where backtesting comes in.
Backtesting, our trusty simulator.
Test your strategies on historical data. See how they perform, refine your approach. It's like doing practice runs before the big race.
Got it. Practice makes perfect. Backtesting is our friend. Okay, so we've got our patterns, our time frames, our entry and exit strategies, our risk management tools, and we're committed to practicing and backtesting. What else could we possibly need?
Well, there's one final thought-provoking question that I think will really resonate with you, but I'm saving that for the grand finale of our deep dive.
Ooh, a cliffhanger. You've definitely got me on the edge of my seat. So for everyone listening, be sure to tune in for part 3, where we'll wrap up our exploration of trend continuation patterns with a question that will leave you pondering and ready to put all this knowledge into action. We're back for the final part of our deep dive, and, I've got to say I'm really excited to hear that thought-provoking question you mentioned.
All right, well, here it is. If you had to pick just one trend continuation pattern to focus on and master first,
Okay.
which one would it be,
Just one?
based on everything we've discussed today?
Ooh, that's a tough one.
It is.
It's like asking a painter to pick their favorite color or a musician their favorite
I
instrument.
know, right?
Oh,
Each
yeah.
pattern is unique, has its
Yeah.
own personality.
But if I had to choose just one,
You got to pick one.
I think I'd go with the inside day.
Interesting choice. The inside day.
What can I say? Rolf's inside momentum concept really got me thinking.
Yeah, that's a powerful concept.
It's like the seemingly insignificant little candle is actually a powder keg of potential energy.
Waiting to explode.
Exactly. It's a pattern that I think a lot of traders overlook.
Yeah.
But Rolf sees it as a key to unlocking those precise entries on lower time frames.
You're getting it.
And I love that he gives us those concrete steps to trade this pattern.
Yeah, what are those steps again?
So first, we watch the closing position of that inside day candle.
Right.
The closer it closes to the high of the previous day, the stronger the signal.
Makes sense.
And then we switch to a lower time frame.
Got it.
Look for those continuation patterns we've been talking about. Flags, pennants, triangles. It's like
already-
we're zooming in with a magnifying glass.
To find that perfect entry point.
Yes, exactly. And that's where Rolf's whole multiple time frame approach is so brilliant.
Right. It all comes back to context.
It always does. It's the thread that ties everything together.
And remember, context isn't just about time frames. It's about support and resistance, volume pattern,
Trend lines.
the whole picture.
Yeah. You know, this whole deep dive has been about so much more than just learning chart patterns.
I agree. It's a whole mindset shift.
Yeah. It's about developing a way of looking at the market that is both objective and insightful.
And that's what sets Rolf's approach apart.
Yeah.
It's not just technical analysis.
Yeah.
It's understanding market psychology.
It's like reading the market's mind.
Exactly.
Well, I am definitely feeling inspired to put all of this into practice.
I knew you would.
I'm going to start with that inside day pattern.
Go for it.
See what hidden gems I can uncover.
And remember, trading is a journey.
It is.
Embrace the process.
I will. The ups and the downs.
And never stop learning.
Always learning.
There's always something new to discover in the market.
Thanks for guiding me through this deep dive.
My pleasure.
I feel like I've gained a whole new perspective on trend continuation patterns and on trading as a whole.
Remember, the market is vast.
It is.
But with the right tools,
Yeah.
you can navigate it with confidence.
And to everyone listening out there, keep exploring those charts. Keep asking questions.
And keep that trading fire burning.
Okay. We'll see you next time for another deep dive.
Until then, happy trading.
Happy trading, everyone.